Hello and welcome to another Major Market Movements End of the Week Market Review for October 16th, 2015. I'm Quad G. In this video, we're covering the peripheral markets. Basically, the PM complex and the Forex markets are my primary focus. The stock market, crude oil market, coffee, those kinds of things. Those kinds of markets are more on my periphery, and they'll come and go in and out of my analysis uh, depending upon how well the individual markets are moving and whether I see good opportunity in them or not. So right now, uh, in this section, we got the SPX, we got the and the Dow and BKX, banking index, crude oil, and coffee. So looking here at SPX, this is a 1 hour chart. S&P 500 index of listed shares as provided by FXCM. So it's kind of a quasi-cash type of chart, kind of a spot market, if you will. And what I'm seeing here so far off this low back here in late September is we've got 1, 2, 3, 4, 5, 6, 7 waves to the upside so far. Generally, an impulsive structure ends on either 5 waves to the upside, 9 waves, or 13 waves. And so far, we've only got 7. So it makes me think that we've got, after this 7 is complete, which may be early next week, we may see a pullback into 8 and then one more push up into 9 later on in the month. And the uptrend is still stable while above this key swing low there at 1990. So for now, I think it's just a wait and see game. I think, again, while we're above the 1990, we could continue to drift sideways and higher in this market. So the QG3 is listed here. It's just a standard measure tool that I use for a lot of markets. It's not necessarily the best indicator for the S&P 500, but it is showing, for what it's worth, a bullish alignment to the upside. The other thing I want to point out is that this market is shying away from the upper Bollinger Band, not in the mood of going up there and touching it at all so far. And same thing was taking place just before this dump. As you can see that the market was coming up and just couldn't quite touch the upper Bollinger Band. And it was actually each time it came up to test it, it just fell short even more and more. So and that to me is a bearish development, and we could be developing that right now with regards to how this market is shying away from the upper Bollinger Band, not willing to risk going up there. So let me see how that goes going forward. The 20 DMA in the S&P 500 is a key level. Generally, while you're above it, it's bullish, and when you're below it, it's bearish. So kind of a swing indicator. The weekly close, top 10% of the weekly range. So again, we're likely to see, 85% probability we're going to see some more action to the upside next week. And last week you can see that we closed in the top 10% of the weekly range, and we did see the fall through. So very consistent there. And the slow stow is wiggling around here just above the 80 level. So we're kind of in an embedded state at this point, and it's opened as of today. We opened back up to the upside. We had crossed over, lost some momentum, but it's opened back up yet again today. So the momentum is still pointed to the upside, but we're still in over bought territory. So you can see the last few times that we've spent any period of time above the 80 level in the last few tops, it has created a turnover with a significant drop to the downside. So I suspect if my longer term Elliott wave count is correct, more than likely we're going to see the same kind of attitude with this oscillator, is that we should see a peak here fairly soon, maybe even see a negative divergence in this market. And zoom in here. We could see, well, you can see we do have a negative divergence developing already. We've got a higher high in price, but the oscillator is still at a lower high compared to this last swing low, or swing high, excuse me. So things are still looking good for maybe some more upside in the short term, but because we're in overbought territory, we're still keen on watching for topping action and taking advantage of it. The EWO not showing any negative divergence there, nothing to go off of really. And the RSI have come up, we're testing the 60, kind of pressuring up against it still. And MACD is open to the upside on the daily, and on the weekly we're open to the downside still, though the histogram bars have shrunk considerably, bringing in that signal line towards the baseline, almost neutral. Okay, so this is a price volume chart with SPY. It's the one that can give me some volume in this platform. So let me pull back here to the last swing top. Well, actually, let's go back to right about there. All right, that's pretty good. Okay, so we definitely, with all this consolidation, we've set up a possible magnet up to 210. This is the highest extreme I think we could go in this particular run. Not saying we absolutely will go there. The next key level is also right around here, about 206, 207, with this little hump here. But this is a form of gravity that could be pulling this price up further. These are not absolutes by any means, but certainly something to pay attention to. That level is certainly possible from my experience. So I think it's best to be mostly on the sidelines right now. I've got the lower leverage SPY to the short, a couple tranches, but and if it gets stopped out, I think it could travel up a little bit further into this zone and find another resistance point. So again, we'll just have to wait and see. Let's take a look at BKX. All right, so had this drop, we've been consolidating sideways. I still think that we've got another leg to the downside at least yet to go. More on this in a minute, and take a looking more on this once I open up the Elliott wave charts and take a deeper look at that. The QG3, again, not an ideal tool for the BKX or stock market indexes in general, but for what it's worth, it is in a bullish alignment to the upside. Weekly, we close as a hammer candle, but not in the best of placement. It's still kind of in this congestion period, congested area. So, but it does set a key low. That low is 69.09. We break below that, that could be bearish and allow for further downside. But for now, I think we could see at least a little bit more upside while above that level. The slow stow here, it did pop up, dropped back down. We're in neutral territory between 20 and 80. and the momentum just today ticked over to slightly bullish. But while it's in this 20 to 80 range, it's really just very neutral. It really can't do much with that, just like that. It's not telling us a whole lot. So EWO, again, not much to show you there. It's coming up on the zero line. RSI is still very neutral in between this 40 and 60 range. And the MACD is open to the upside on the daily, and on the weekly, we're open to the downside, bearish, and no price volume. So overall picture, I think in the short term we could see a little bit more upside, but I'm still bearish on this market and still think there's a good shorting opportunity here. You just have to wait a little bit longer for this current move to end. Let's take a look at crude. This is 15-minute. Let's go to 2-hour. All right, so this is a very ugly impulse to the downside, or some kind of double or triple zigzag. It's not terribly clear, but the short-term downtrend line is clearly broken, and so at a minimum, I think this is a wave A to the upside, which may end soon. See a B down, and then maybe one more C up. Could there be something far more bullish than that? Sure. Obviously, if we shoot right back up to 49 or higher in one big impulse, that's going to be very bullish and could develop some momentum to the upside. The QG3, this market's still trying to hang on above the 20 DMA. Right now, the QG3 is in a neutral alignment, but it looks like it's holding on, and that may be allowing for this move up to the upside right now. Weekly, we just got an inside negative week. It's neutral. And the slow stow, it had momentum to the downside, but it's closed out. It's now neutral, in neutral territory. EWO, nothing to show you there. The RSI, neutral territory between 40 and 60. Nothing to show you there. MACD closed out, neutral. And on the daily and weekly. Weekly, it's still slightly open to the upside. And our price volume, let's go back to the low here in August. You can see how this previous congestion here developed a lot of price volume right there at about 44 to 45. And it looks like the market wanted to come down there. It tested it and then popped right back up. And this is kind of a prime example of what I'm talking about with regards to this particular indicator, is that these humps can be points of target for the market and support or resistance. So, and it looks like it's providing some support here, right there at about 45. Okay, so let's move along to coffee. Oh, well, let me back up and say crude oil, I think we're kind of in a neutral spot. We could just bounce up into a three-wave move to the upside, kind of corrective, maybe fill in some of this manic behavior. And then, but from there, I think there's a good chance for another move to the downside. However, there's another count that allows for a move up. The rest of a larger move up, but I don't know that I favor it as much. The rest of the indicators here are more or less pretty much neutral, and so I think crude is just sitting here in a neutral price space at the moment. Coffee. So coffee looks like it completed an impulse to the upside, and now let me pull back here. I do think we probably got a left neckline, left shoulder. This is a head. Here's a right neckline, and we now may be dropping down into a right shoulder that could come down here, maybe into the 119s, 120 area in a three-wave move. But then from there, I think we'll be turning right back up and shooting impulsively um, well into probably coming up here to test this area between 220 and 230, somewhere in there after this is done. Okay, so coffee on the QG3, again, not the most ideal um, market for the QG3, but there are occasions like right here, the 10 EMA did try to hold that support and it did it a few times. Um, but this market can whip through the 20 DMA very quickly. As you can see, all this oscillation just completely ignored all of the QG3 moving averages. Um, and now we've come right back down. It looks like we're going to end it ended the day right there at the 20 DMA. The QG3 was in a bullish alignment. Looks like we're now still slightly, very slightly in a bullish alignment, though working on moving into neutral territory very quickly. The week closes, bearish. We got this outside, almost an outside Q reversal, not quite there, almost, very, very close. Basically, I think you call that a hammer, and could allow for some fall through to the downside going into next week. Coffee on. There might be a bounce in there too, which I'll go over in a second. The slow stow was embedded in the overbought territory above 80, and now it's dropping down and opening up um, from 80 heading downward. So the momentum has shifted here. It looks like we've topped out, and we could see the momentum start to push the price to the downside there. EWO, no negative divergence there. Nothing to show you there. And the 70 level on the RSI did hold as resistance, as it did previously here at this rise. So we're just pulling back. If the price can stay above the 40 level, that's another key level. I would say the momentum is still to the upside on a midterm basis while above the 40 level. Break below the 40 and you scrub off a lot of probability for continued upside, at least for the midterm. The MACD is still open to the upside, though histogram bars are shrinking, revealing the weakness currently. And on a weekly basis, we're still open to the upside there, coming out of a positive divergence. You can see you got a lower low in the price here, but we got a higher low in the MACD. So we got a positive divergence set up in the MACD between these 2 points, this low and this low. And for whatever reason, it's because it's an ICE commodity. They're not sharing their volume info with TradingView, so we don't get to see the price volume there. Okay, let's move on to the Elliott wave charts. All right, let's go back here to the Dow. All right, so I still think we're working on wave C to the upside here. Not quite finished. I think we could see it eke up a little bit more into possibly the last week of the month. Basically, this is just a repair job of this plunge to the downside. So we're coming up and backfilling some of that manic mess, if you will, cleaning that up. And but I still suspect we're in bearish territory while we're below the blue line for sure. And this Elliott wave count which I just slightly favor more than some others. Um, Really, the LA wave isn't, nothing's really standing out as the wave structure, but I am favoring this one for the moment, just to illustrate the current short-term movement, which I do think is a final C. C of 4, maybe a C of 2 even. Um, but we've got key resistance coming into play anytime now, from about 17,250 all the way up here to the blue trend line is a key resistance zone. We'll have to see how the market handles it. All right, let's move on to the SPX. All right, so here's a micro chart. This is basically wave C to the upside. So this gives me some micro wave structure that I can't get with the Dow. Well, I can slightly. I'm on YM. I could go on there on the 15. Pretty sure it's going to give us the same view. Back out here. Maybe 15 is too much. Let's go to an hour. All right, so basically the same structure as the SPX. We got 1, 2, 3, 4, 5, 6, 7 waves up so far, it looks like to me. I think SPX does a better job of delineating the different waves. So we got wave 1, 2, 3, 4, 5, 6, 7, almost finished. Pull back into 8 possibly next week. Might fill in this manic move to the upside. And then from there, a final 9, which I think could get pushed out all the way into the last week of the month. All right, let's move on to BKX. Okay, so here's the LA wave count that I've got going so far. I've changed it around a little bit because of the length of this particular wave. The previous count just didn't make sense with how this market is moving. So when your LA wave count just stops making sense, there's no shame and just tossing it to the wayside and start over from scratch and see if there's a better count out there. Um, it's much better to do that than continuing to rely upon a count that is just stretching the limits and becoming less and less likely. So this is the count that, after going back and reviewing all this structure, it looks like the most probable at this point, with a wave 1, wave 2, um, and then a sub 1 to the downside. We've got a 1, 2, 3, 4, 5, I think, to the downside for wave 1, and then an A, a B, and now working on a C of 2 to the upside. Let's flip that around there. There's C of 2 to the upside. That may give us a double top, I think, or maybe just a slight incremental high for wave C. The blue trend line is also key resistance and could cap this move as well. And once that's finished, I think you could see a drop to the downside. Also, this swing low here at 69.09 is key support. The inside key reversal that we saw, the double yesterday, did set that as a key low, and it could be a potential breakdown point if the price comes shooting right back down. All right, crude oil, again, LA wave count. This structure could be a wave 2, could be a wave 1. It's just not terribly clear. So for now, we did get the false breakdown yesterday, and we got this pop up. I do think that we could see this market kind of chip along here for at least 3 waves up into a sub 2 at the very least. So I think we got wave A working on to the upside now, wave B early next week, and then possibly by the close of next week, maybe up into wave C. Repair this damage here to the downside before another slide down into wave 3 of wave 3 green. The other potential I see is if we shoot right back up into wave 3, it comes up and challenges 50, 76 or higher, then good chance we've switched momentum and we're on a bullish trajectory over the next several days as we flesh out a wave 3, a wave 4, and a wave 5 of C. All right. Let's go on to coffee. Looks like coffee, this blue trend line, coffee found resistance there and pulled back. So that blue trend line's been tested once, twice, 3 times. So now we could see a three-legged move to the downside, A, B, C. That could come all the way down here to 120 or even 119 to finish out C of 2. So this gives us another opportunity to get in long. If you missed out back here, getting in long, this would be your next best chance to get in long for what could be a substantial rally to the upside. And of course, the next move up will foster that move by giving us a rule of 4 breakout. All right. Okay, so that's going to conclude my peripheral weekly market review, and I hope you all have a great weekend, and we'll be seeing you next week. Adios.